Best ways to finance your new car. Life can be summed up in major decisions and events: high school graduation, first job, house purchase, and car purchase. Yes, getting a car is a major life decision, especially if it's your first. A lot of factors must be considered. What brand of car do you want? What model suits you most? How much are you willing to spend to buy a car? And how are you going to finance the purchase? Perhaps you've been dreaming of getting a new car for some time now. You've been checking out models and making comparisons to evaluate the options you have. Buying a car is no small deal. You need to carefully consider the cost and financing options and how to negotiate a deal before turning up at the dealership. But first, you need an understanding of what car financing means, so this video will cover that base. Financing a car is the process of taking a loan to purchase a vehicle. This loan is then paid back over a period of time. As is the case with other types of loans, you must reach an agreement to pay back the borrowed amount, the interest, and also the fees. Your payment will be scheduled, probably per month, to maintain a good standing on the loan. Almost any financial service provider can help you finance your car purchase. Banks are especially known to provide such loans, but credit unions, online lenders, and manufacturing financing groups do so too. To secure financing, the financial service provider will look at your credit report and credit score. The higher your credit score, the higher your chances of securing a loan approval and gaining a lower interest rate on your repayment. There is a word of caution here. A low credit score is not necessarily a disqualification, but it might mean a higher interest rate. Taking a loan with a high interest rate could be risky, and you must not be too excited about getting a car and taking a loan with interest that would make repayment backbreaking. You will be provided a set of terms and conditions by your lenders. You need to carefully go through these before agreeing to the loan. It will spell out important information on what is expected of you, your monthly payment, and the length of your loan. The financing process can sometimes seem cumbersome, and this is why some people put it last on their list of to-dos when getting a car, which shouldn't be. If carefully taken step by step, financing your car can be the simplest thing. Come along as we explore the important aspects of financing your car. Having access to a care financing does not mean you have to go all out. You still need to consider what is most comfortable for you to pay for. There might be a specific car that really catches your fancy. In your mind, it ticks every box, but unless you can afford it, the car had better remain in your dream. Think of what you would have to be paying monthly, as well as regular vehicle ownership costs. A helpful guideline would be to limit the amount you spend on a new car to no more than 20% of your monthly income. This, of course, would include the monthly loan payments and all ownership costs like fuel, insurance, maintenance, repairs, registration, and so on. Another thing to consider is if you really need to lease your car or go for an outright purchase. Depending on how frequently you like to change cars, you might consider either buying the car outrightly or just lease it for a period of time. Another advantage of leasing is that you get a higher quality car for your money because the down payment and monthly payment are considerably lower. However, you don't get to own the car outrightly, and you must comply with certain terms like mileage restrictions, wear and tear fees, and so on in order to avoid incurring heavy penalties. Car ownership costs go way beyond your initial down payment and monthly payments. You need to have an idea of what it costs you to get gas, insurance, repair and maintenance, and so on. You can get a rough estimate of how much fuel you'd be needing based on your annual or monthly average miles. You can also get auto insurance quotes on the type of car you're looking at. Note that dealers don't usually include fees like sales tax, registration fees, and documentation fees in the sticker price they advertise. So, you need to factor in fees like sales tax, registration fees, documentation fees, and others that aren't normally included in the dealer's advertised sticker price. You can demand a detailed breakdown of the price quoted to have an idea of what other fees to expect. After setting your budget and deciding the kind of ownership that suits you best, you should start gathering information on the cars that have caught your fancy. Start by visiting the websites of the automakers. You should also check out some car review sites to look for specifications that you want. Look for possible discounts. A lot of automakers give discounts to students and servicemen. If you belong to some credit unions, you may be qualified for a discount too. Your credit score is an evaluation of your creditworthiness and your capacity to repay a car loan, or any kind of loan for that matter. It's the computation of your credit report in a 3-digit score format. Higher scores are indications of higher probability that the borrower can repay a loan. Lower scores, on the other hand, show that borrowers are less likely to repay their loans. You can have a good number of different credit scores. This is because different credit reporting companies adopt different methods to arrive at the scores. Experian, TransUnion, and Equifax are the three major credit bureaus. Your credit score can sometimes be referred to as your credit rating or your FICO score, although a FICO score is only a type of credit score lenders have access to. Most models of credit scoring range between 300 and 850 points, though there are still other scales. Note that scores obtained by different models are not directly comparable. Having a high credit score increases the likelihood of you getting a car loan with a low interest rate. Conversely, a low credit score will negatively affect your chances of getting a low-interest loan. If you are steadily employed and have a score of 720 or more, you should have no problem getting financing. The next point is a no-brainer, but extremely important. You need to shop for the best car financing deal. Lenders determine their auto loan interest rates based on different factors. Some of the factors include market demand, how creditworthy you are, and the amount you are borrowing compared to the value of the car, and how much risk they're willing to take. That's why interest rates can vary greatly in the marketplace, depending on whom the lender is. If you research well enough, you can easily find competitive rates and promotional offers along with generous terms. The same way you'd shop at several dealerships to find a car, you should try out different lenders to determine which deal is best for you when you want to finance a car. We are now in an era of unprecedented lending options and information that's easily accessible about rates. Apart from the financing organs of a lot of car makers, auto financing can be sought from big national banks, small community banks, credit unions, financing companies, and online banks. Most car dealers don't provide financing for cars. However, they stand in as agents for third-party lenders like banks, credit unions, and financing companies. They get commissions from the lenders for their role. A dealer's finance offering may be the one that guarantees them the highest return, but not necessarily the best deal for you. So you must be wary and look out for what would be the best deal for you. The following are some available options. One is big national banks. Big national banks are household names in the financial sector. Examples are Bank of America, Wells Fargo, Capital One, and Chase. Their numerous branches are in every corner of the country. They also run smartphone apps and online portals. They offer the highest level of financing sophistication, but if you need more dedicated, personalized service, they may not be the best option. Another one is community banks. Community banks can have between one physical branch to a few dozen. These branches are within a small geographic reach. Their services may not be as sophisticated as those of national banks, but they offer more personalized services where the national banks are particularly lacking. You can also go for online banks. These banks are not physically available, although they offer services similar to those of the big national banks. An example of a great choice when it comes to car financing is Ally Bank. Check credit unions out. Credit unions are a different nature from other lenders. They are cooperative in nature and owned by members. In the place of profit returns that other financial institutions give their shareholders, credit unions recycle their excess revenue to members as low interest rates and higher savings rates. Their sizes vary widely. Navy Federal Credit Union, State Employees Credit Union, and PenFed Credit Union are some of the biggest in the country. Credit unions are usually not open to all kinds of consumers. The criteria for membership might be professional, like the Navy Federal. Others are more open, like PenFed. Check mycreditunion.gov for credit unions you are qualified to join. You must have also deposited a few dollars before you get access to a credit union car loan. Their loans are not for non-members. Your next car purchasing experience should be an exciting one. Being informed on starting the whole financing process is very important. That way, your focus can be on getting your dream car and cruising out on the road with it. We would like to have you back, so subscribe to the channel and give this video a like. Thank you.